Hello, hello. How we doing, Arizona?
Welcome to our live. That hopefully you guys are following us all the time every Wednesday at noon.
There's a lot of noise in the world. We're here today to try and give you some good advice backed by facts. We're not here trying to sell. We're here trying to educate today.
Yeah, so basically, majority of my oh, by the way, my name is Raul Hernandez. If you guys haven't met me before, I'm a realtor with Keller Williams and the Grimaldo Group. And this here is Chris Verde.
Hello, everybody. I prepare house loans for the Grimaldo Group.
He's an excellent lender. He makes things happen for you. But anyways, what I was saying is most of my calls that I've been having with my clients have been relatively longer than they normally take. 10, 15 minutes, we catch up. How are you doing? Everything, what are you feeling? But now everybody has this notion about the market, and they're all saying, yeah, well, it's about to go down. All our values are going to go low. They just think that this looming recession that we're in and about to enter, which is a reality. Markets go up, they go down. We're talking about the stock markets, though, not the housing market in Arizona, right?
Yeah. Historically, property values just keep mooning, right? They go up, they go up, they go up. So
I want to show you guys the recessions in the past, just to start giving you facts, and you can start deducting, an opinion, but more educated opinion.
based off facts, right? We're not selling you something because we want clickbait. We're not reinventing the wheel. And I think you're onto something. History has a funny way of repeating itself, and we're taking a page right out of 1980s recession right now.
Let's check out the recessions in the past 6 recessions that have happened in the past here. So we're looking here. The recessions don't equal a housing crisis, which means, see that 6.1 at 1980? That 6.1 means the appreciation rate. How much homes values increased that year?
Yeah. So, by definition, what we're going through is inflation, right? There's not enough goods for the amount of cash being spent. And in funny times like this, the value of physical dollar goes down, right? Because it's not tied to anything tangible. So I think for me to go into details, hard assets hold their value during a recession. This is gold, the silvers, oils, and in our industry, real estate, right? So what we're seeing in detail here is, hey, hard recession in 1980, Ronald Reagan was working very close in hand with the Federal Reserve and said, we got to do something about this. It's getting out of control. So again, we're not here to reinvent the wheel. They literally hiked the rates. Anyone want to take a guess?
Let's go to the mortgage rates.
Right.
Slide.
You'll see a correlation.
Yeah. Okay, so mortgage rate slide. Go ahead.
If you go in detail, and it might be hard to see with this visual, 18.64%. Okay, and this is, you can Google it, Freddie Mac. This is their data. 18%.
I want to point at it so bad.
Some of you might be old enough watching this to say, yeah, I remember having an 11% mortgage, 12%. Don't take our word for it. Ask your grandparents what their interest rates were. So historically speaking, in terms of rates, we're not seeing, by no means, the worst of what's been out there. In fact, this would still be considered historical lows. Till this day, I'm still quoting most of my clients 5.25 hours.
So if you can look at this slide, guys, the amount of years that the rates ended up staying that high just to fight that inflation, right?
Yeah, it's a cooling effect, right? If right now there's so many people buying houses because the rates are so low, money's so cheap, hey, we gotta calm this down, right? So the way they're doing that artificially is we raise rates, things kind of settle out, because by nature it was such a seller's market, right, that people were getting hosed out there. I mean, some people, and I do financing in multiple states. California is the biggest one. Some people complain about paying 10 grand above asking. People paying 150 grand above asking.
So the assets back then, right? the assets back then continued to rise at a 6 point. Let's go back to
The value of assets slides for real estate.
the recession. Yeah, the recession slide. Okay, that was 1980. That whole year, it kept on going up and up and up. The price kept going, but interest rates kept going higher and higher.
But real estate held its value.
It held its value. 1981, it was little less because the rates were so high, right?
Yeah, but that was part of the recovery plan, right? What they did back then was by design. The presidential cabinet, Ronald Reagan, as well as the Federal Reserve, they knew what they were doing, and they said, "Hey, if this gets out of hand, we're going to be in some really deep water." And it's the exact same thing that we see now. In fact, you can watch the meetings digitally on YouTube, and you're seeing Jerome Powell and even the president. They do meet quite frequently to go and discuss what they're doing.
But we're going to skip real quick to the big one that everybody keeps telling me that this is going to happen again.
Yep.
And everybody keeps, on the phone with me for 20, 30 minutes arguing that I just feel it, Raul. I just see it coming. And I'm like, what do you feel? These are the facts, guys. So in this 2008 recession, there was exactly around 162,000 homes foreclosed on. Okay? If you go back, you can Google it. We can Google it right now if you want. You could go back and see how many homes were actually foreclosed on. And let's see here. Oh, in California, the number one, right?
Yeah, hardest recession state.
Hardest recession state. There was 632,000 or so foreclosed properties.
Yep.
Florida was followed it by 516,000 properties. Arizona was third with 163,000 homes foreclosed on. That was the worst of the worst housing recession.
Yeah, I mean, the correlation there is that builders saw the vast opportunity, so they over-leveraged themselves, and they needed the smaller subprime banks and banks to lend to all the people after they built them, right? But the reason we got in this pickle is because the type of loans that were being offered were extremely risky. There was no ratio loans, meaning, hey, regardless of what your debt or your income looks like, you got the loan, right? There was stated income loans saying, hey, I know that you're, and no disrespect to somebody if you're in this position, but maybe a grocery bagger, but I'm going to give you $1 million loan for this house that's, 10,000 square feet that you have no business buying, but hey, you have the down payment, so we're going to get it to you, right?
Right. So as soon as the market wibble wobbled and something happened, right, where all these loans started just to come
Default
back,
rate.
Default, foreclosure. Okay. Can you please share the law of supply and demand? Let me see if I can pull it up here. Or actually, I'm going to have to Google it. Sorry, guys. Give me a second. We'll switch over. Here, let me see. Just so you know, all these people started losing their homes, right? 162,000 homes lost. Uh-oh. Here you
Almost
go.
there.
Let me see. Oh, gosh. I think I went into the wrong one, but anyways, we'll okay. The causes shifts curves. Okay, that's a whole class of let's.
Well, no, there's definitely some substance to this. So, we're here in Maricopa County. That's the primary, bulk of our business that we do here local. Now, the supply and demand is such as this, right? If there's more people moving to our county and there's not enough houses, and everything that we're saying with you is backed by fact. If you guys want to look at the Crawford report, ASU, Arizona is a local college here. Their business and real estate department puts this report out, and they do pull data of how many actual closings has there been, what's the inventory, how long is that shelf life of inventory, right? what we're seeing here is that there's just not enough houses for the amount of people moving here. In addition to that, part of this is due to pandemic, but there's been a break in supply chain. The builders don't have the materials, or if they do, the costs have gone up. So now draws and financing take time to acquire. They have to reset their margins. And it just happens to be that for every 4 people that move to the state, there's only 1 unit of housing for them is what we're at, right?
Yeah. So basically, there's a need of 165,000 homes. So according to the rate of how many people are coming, which is around 265 per day,
Right.
265 people migrate to Arizona every day. So that means, according to what we have in supply, all the builders that are building, the people that are putting their house up for sale, the small amount of foreclosures that happened, what was it, like 800 last year or something like that?
It was very small. It was under 1,200 for sure.
So under 1,200 foreclosures in the whole state, right? Compared to 162 that we saw in the other slide that I showed you, in the other report. In 2008, that's how many homes we lost, 162,000, right? Right. There's a need right now of 165,000 homes. Only 25% of that is being met.
Yeah.
By all the builders, all the foreclosures, all the people that are putting houses on their market. Still, there's a gap of 75%.
And that's the supply and demand effect that we're seeing. So
Right. So now, check this out, guys. Even if this recession causes a little bit of a hike in foreclosure somehow, right?
Right.
That's going to add. How much can it add? If the recession isn't being caused by the market,
this is by design,
right? The recession isn't. It's by design. They're causing it by design to stop inflation, right?
Correct.
It's not directly like in 2008.
2008 was the subprime meltdown. Bottom line is investors got hosed, little guys got hosed, everybody was over leveraged. 401ks, they're the ones that took the beating, and it's just
that's what made the overage in supply.
Correct.
So the scale got tipped over, and there was so much supply and very little demand. Not enough demand to absorb that supply up until 2017, 18,
right,
when we started seeing
a tipping point. Now, to be clear, this may occur in some other markets where things kind of slow down, right? Some places where maybe housing isn't as desirable, maybe the economy isn't as robust. But right here, specific to where we are in Arizona, Maricopa County, and a lot of counties are performing the same way. People want that quality of life in the West. They want to move here. They want to be in suburbs that are built literally 5-10 years ago. I mean, we've got a booming economy, and the state is very smart, incentivizing companies to come here. I mean, we're talking some of the biggest semiconductor plants, big solar companies, huge electric vehicle companies. Intel is out here, huge banking infrastructure. Whatever your niche is, you're going to find a good footprint out here for yourself.
Yeah, so it's becoming a hub.
Correct.
In the Southwest, Arizona is a hub of where to live and where the money's at and where business is at, and so that's just going to keep that demand coming in, right? So if there's not going to be enough supply to counterbalance that demand, if right now 25% of the demand is being met, the only feasible thing that I could think of is to be able to pump in that other 75%,
right,
is foreclosures.
There's just not enough. It's still a shortage.
You can't and majority of Arizonans that have taken advantage of purchasing a home from 2008 to now have
triple their money.
Yeah, their credit is in the greatest all-time history of history. Their credit is great.
Hopefully.
Their equity, could, let's Google
the
it.
Equity is definitely there.
What's the average credit score in Arizona right now for homeowners?
Yeah.
Like most people are in a great position. They took advantage of the refinancing boom that just happened this past year and a half.
Yeah, 2 to 3 year good.
Right.
Cycle,
It was 1.75 or something, like ridiculous amounts.
Yeah. I had a couple tuna quarters peppered in there.
Yeah. So what would cause those people to lose their house? If their payment is low, It's a fixed rate.
This is a different type of recession. It's nowhere near 2008. They're done for different reasons, and a huge portion of this is weighted on pandemic. Unfortunately, we're going through a war, and we're still giving printless amounts of check to other countries to protect themselves, right? And last but not least, it's just a lot of people were bored at home and bought a bunch of stuff, and I called them Corona bucks, but a lot of people had extra cash, and with supply chains not out there, I don't care if it was a mattress, I don't care if it was a cell phone. There was just production shut down for almost a year in a lot of countries due to the pandemic, and people were outbidding each other for the very products that were out there. And that's the exact same thing with real estate. So what did everybody see? An increase in pricing due to supply chain loss, as well as the fact that because that product wasn't there, they outbid each other. And that's why it was a seller's market nationwide, right?
Yep.
Yeah.
So it's the start of the hike of the price for the loans.
Yeah.
Right? People are going to start seeing 8%.
Possibly. Yeah. So
9%.
what we're following here is the Federal Reserve announcement. Okay. They meet about once a month and they dictate, hey, do we rate the rates by 50 basis points a half? Do we do it by a quarter? So they are currently doing in increments of a half. There's a good chance that we'll see a slowdown come July in increments of a quarter. Now, make no mistake, the advice that I'm giving my clients is whether you buy now or you buy next year, you're going to continue to see, at least in Maricopa County, prices continue to rise. That is a statement that is true. You can look at the historical data since 2008 if you want, okay? But what we can't control is market change with interest rates. So yeah, you know what? I might carry an extra $150 in my payment, maybe as much as $250 a month. But do I want to do that and still get the good deal, or do I want to pay $20,000 to $30,000 more next year, right? So I tell clients, unfortunately, I can't protect you from the rate, but what I can tell you is if you look at the prices, even if you spend $150 more over the course of 10 payments, that's, what is that, $1,500? Are you going to kick yourself in the shin because you didn't want to pay an extra $1,500 this year? Or do you want to sit down and pay an extra $30,000 next year, right? And that's the argument that we have. And most people don't realize this, especially if you're a first-time home buyer. Most people benefit from getting to write off the interest of their mortgage anyways. So it kind of goes full circle, but that's it. It's simple mathematics. Yeah, I might have an extra higher payment, but either I pay the extra $1,500 to $2,500 this year, or I take a hit and pay 25 to 30 grand more next year. Again, that is specific to our demographic, our market here in Maricopa County. Some other counties, that aren't as hot in real estate, I don't know, we'll do an example, maybe Kentucky, maybe Alabama's, places like that where economy isn't as big. They may see flat values, they may even see some dips, but right here, this is one of the hottest real estate markets in the U.S.
Yeah. So in conclusion, I know we probably
killed you with facts.
Killed you with facts, but I don't even want to get into the renting versus buying. I don't even want to get into the like why you're gonna sit there. Like if you have equity in your home right now, guys, find a way. Find a way to get it out. There's HELOCs. There's all kinds of
second mortgages if you want.
Second mortgages, things you can do with that money to get a second home, a third home, because that demand is going to keep rising, right? And the supply is not being met. Lumber. My neighbor told me that tile, like they're having to put sandbags on the roof.
Cement used to be able to get same day or next day,
Concrete.
And now it's taking people 2 months ahead of time, and the prices have tripled or doubled.
And it's not going to be from now until all this gets fixed, the supply chain things and all that.
Yeah,
it's going to be a while. So
it's still very much a seller's market.
Let's get it. Let's take advantage of this. Give us a call. Give your experts here a call so we can go through a strategy session with you, figure out what you can do with what you have and where you can move on and get your family to a better, wealthier situation. Take advantage of it. You're in Arizona. Do it. And if you're not in Arizona, guys, and you're watching us, this is the place. I'm not going to be the only one that's going to tell you that.
It's a good quality of life. Come have some fun during spring. You'll see all the baseball games. You'll see the city drive. Still not too hot. You can go outside and enjoy yourself. Exactly. Yeah. But big picture, there's not a single vehicle in America that has made the middle class wealthier than real estate. It's as simple as you buy something low, you sell it high. And in Arizona, we've only seen climbs since 2009 to 10-ish. So it'll be that way for quite some time.
Thank you very much,
Always
Chris.
a pleasure.
I appreciate always working with you,
Yes, sir.
and we'll be available for you guys. Give us a call.